Hey guys, super pleasure being here once again on our show, the TradePod. And today I have the incredible pleasure having Wieland Arlt. So, Wieland, it's an incredible pleasure having you on our show. Now, before you present yourself, I'll tell that you are an incredible trader with an incredible podcast experience as well, which we'll talk about in depth over this upcoming conversation. So without me digging deep at first, I'll let you to present yourself. And first of all, it's a pleasure having you here. Yeah, go ahead, mate.
Yeah, I think thank you so much for the kind invitation. I'm so happy to join you on your podcast. It's always great,
Our pleasure.
to discuss with fellow podcaster, fellow trader, and therefore it's always great to dive deep into everything. So, yeah, let's see. Some words about myself. I'm a trader, obviously, otherwise, topic would be missed. So that's number one. And number two, what else? What else should people know about me? Um, I'm a technical analyst, basically, and because of that, I made it up to the top of the International Federation of Technical Analysts, the IFTA, as their president. It's the fourth year right now. I'm serving them as it's voluntary, so it's a service we do. And with IFTA, we are basically we are responsible for technical analysis. So we define the not really the rules, but we really take care of the right way to analyze markets. We discuss it with a lot of people in the world with the big names. All of us should know at least. So this is our heritage. And besides that, I'm traveling the world. Right now, I'm in Bangkok, Thailand. So I'm like 5 months a year, I'm in Asia. 5 months a year, I'm in South America. And the other 2 months, I'm more in Europe. And as I'm German, most of the time then will be in my home country, like Germany. So, yes, that's me.
First of all, um, talking about technical analysis. Before this conversation, I had a conversation with an Israeli startup,
Uh,
speaking about commodities.
yeah.
Their entire operation is to give a fundamental perspective to trading desks that trades commodities like in a much larger scale than we that might be the majority of the listeners might be aware of.
Mhm.
Now, I'm just mentioning you said that you speak to a lot of colleagues and workmates about
Yeah.
the right way or the right mechanism to properly analyze financial instruments. Now, speaking about fundamentals and about how we can insert them onto how they drive an asset, and
Mhm.
of course, taking into consideration technical analysis, I would like to ask you how the correlation between the fundamental analysis and the technical analysis can be into influence within commodities within the commodity markets.
Yeah. I mean, it's not just true for commodity market. Basically, it's true for all markets and all assets.
Yeah, of
So,
course.
because of if you analyze an asset, so let's stick with commodities. Let's go with gold. So, given gold, it has a certain value itself. For whatever reason, people feel like it's very valuable for being rare, things like this. So that's a fundamental part number one. So this is, you have an asset which is rare, which is not easy to get, which is limited somehow, at least for now. You never know, but for now it's limited. And for ages, people agree on that this is really valuable. So gold. So that's the fundamental point here. So this means people give it a certain value. But if you look at a chart, this value is not really stable. So it decreases and it increases, right? So this means if you look at the chart, it's the same, very same asset at different times has a different price. Why is that? there's not more or less in the market right now. I mean, worldwide, people might sell and buy it, but what drives really the price? Like in huge circumstances. Then you might say, okay, maybe we have some war going on, or we have some crisis, or we have inflation, or whatever. We might switch over to gold, which is a fundamental reason as well. But still, price is moving then, right? So, and then you see that when the price reaches to certain levels, it might reverse, go into the downside again for a correction. And as an analyst, you might look at a chart, and then you like to see where is a good point to enter a market, where's a good point in the chart, or what is a good price to get into an asset or exit an asset. And this is where technical analysis comes into place. It doesn't change anything about the fundamentals, but it gives you a hint when to enter and when to exit, what is the right timing. And the more long-term you're thinking, or the more long-term you want to invest, the more important it is, obviously, where you invest in. The more short-term you are, the less it gets important what is behind that asset, because you're just going for the move. So that's basically how we can understand what combines both and what's distinguished both.
Mhm.
Does it
Now,
make sense?
yeah, of course it makes sense. Now, speaking about the value of gold over a long period of time, and of course we spoke about fluctuations and how you can determine the upcoming fluctuations out of technical analysis.
Mhm.
You know, that's when you go up when you go to people and you say to them that you're able to predict the next move by or understand better the current move that the market is currently going for, people getting freaked.
Mhm.
They actually getting freaked, and of course on my behalf and the people that I spoke with within the technical analysis and their understanding about the situation, they lack of faith that such a move can occur over time just by understanding the technical analysis. Like
Mhm.
they put in doubt
Yeah.
the power of technical analysis, which we can understand why. Like,
Mhm.
speaking about big institutions, that bleed hundreds in a millimicrosecond to the market. They do not really believe in technical analysis, but it works. It works. No, there is a
It
gap.
does.
There is a gap,
Yeah.
and filling the gap. How do you actually reflect onto like bringing technical analysis onto a much more understandable evidence to the next upcoming move?
Um, Well, sometimes people feel a little bit uncomfortable doing technical analysis because it feels so easy. You just jump into a stock. Let's say you go with stocks now. So, because you read something, you feel like, oh, they have a new CEO, they have a new product, they have like great numbers presenting for the quarter. And then I feel like, okay, I'm gonna be part of this. I jump right in. But what people always, not always, but very often discover is that they jump in and immediately after price drops. It's like, like a law of nature. It feels like this. So this happens very often. And then they feel like, why is it happening? I read in the newspaper that this is a great stock, great company, great product, and there's a huge opportunity, and everybody's talking about it. And now when I'm buying, price is dropping. So that's like a trap for a lot of people. And they are just questioning themselves, and they're questioning their decision to invest. Using technical analysis means you might find the right asset in terms of, let's say, you want to buy technology back then, and you needed to decide between Nokia and Apple. So it definitely makes sense to do the fundamentals, right? But
Mhm.
it also makes sense to look at the chart and see if you have some kind of uptrend, if you have a correction within the uptrend, if you have some kind of reversal coming up, or if you're buying into a downtrend. So you want to know this, right? You want to know if you're buying into a resistance zone or if you're buying into a support zone. And this is where we talk about timing. Still, it's the same asset, but it might not be today. It might be next week or next month. When is the right time to buy it? And that's what people need to understand, that they have to look, especially if they want to invest, not talking about trading, talking about investing, right? So if they
Mhm.
want to invest, of course, they have to look at the assets and the companies, so what is behind everything, but they need to apply some timing as well to get the best price for their investment. You know, for example,
Mhm.
it's also you just go, let's say you go to a market, some kind of supermarket, and you don't look at the price. So just say, give me that one, give me five of these pieces or whatever it is. You might get any price because you just don't know. So you get the price which is just called. It might be the best price, might be the worst price, might be in between. You just don't know. You just say, give it to me. And basically, that's always a mistake, as we know from life, I guess. Right.
Mhm. Now, you know, it really, speaking about how, in context of technical analysis, now, hypothetically speaking, if we were facing an issue. All right. Let's hypothetically say that we're right now facing an issue in within the need to invest. All right.
Yeah.
Now we're looking at a particular stock, which had a huge downturn over the last 6 months. And right now we see a much more stabilized situation, and we see that fundamentally speaking, their entire earnings were positive over the period of the if over the stabilized period, and of course over the period that the market went down for that particular stock. Now, speaking about technical analysis and where we can insert the understanding of how the technical comes into to fill in the big picture,
Mhm.
we, most of the people will feel that right now there is a feeling inside of the market for that stock that we're going to be seeing an uptrend. Speaking about
Mhm.
bullish to bearish or conversely bearish to bullish,
Yeah.
um, this is a really easy situation to understand. But speaking about consolidation,
Mhm.
when a stock consolidate and when you do not know where the market predicts or where the market plan the next move to be, what do you
Mhm.
do then?
Well, it's always the same. You need to look at the chart. And if you look at the chart, you need some basic understanding. It doesn't have to be too sophisticated or too complicated, but some basic understanding of the nature of a market's move or how prices are built is important. So if you look at the chart, you want to do some kind of analysis, and also you really want to see when a price might return back, let's say, to the uptrend. You need to understand that a price always moves in, let's say, waves. So this means you have some or swings, make it easier with swings. Let's say you
Mhm.
have an upswing, right? So like an impulsive move. And this move is not going like without any correction. It's always like, breathing in, up move, breathing out, correction, breathing in, continuation of the up move, breathing out, correction of the up move. It doesn't mean it's always like going 0, 100, 100, 0, 0, 100. It goes usually like 0, 100, 100, let's say 50, 50 to 130, something like this. It's like always breathing in, breathing out. So you have the sequence then that a market when a trend develops has a sequence of higher highs by breathing in and higher lows by breathing out, but not down to zero, but also a bit higher, right? So by doing this and by watching this, you see that in a chart, the price finds always some points where it stops, he or she, the price, where the price stops its correctional move. And if you're familiar with the second concept, which is support and resistance, which is often found at highs and lows, which haven't been made previously, and if you combine both, the sequence of higher highs and higher lows, for example, and when you see that the price drops to previous high, forming a support zone, this gives you, for example, an opportunity to enter the market at a low price or lower price, of course, with the idea of profiting from the returning uptrend. So that's basically how you combine both. But of course, that's not really a guarantee. It's just, people watch this, they have this as a conclusion. And yes, of course, it's a theory, but the theory is proven more than enough to say, yeah, we can work with this. And then we also have to look at probabilities. How often does this happen compared to how often does it fail?
Mhm. It's a really interesting situation where you distinguish I don't know, a channel,
Mhm.
and you decide whether the data is against the channel or follow the trend
Yeah.
as we speak. It's always a great question. Now, speaking about, let's make that conversation much more a little bit more spicy. Inserting order flow. Now,
Mhm.
order flow, and speaking of day trading, where you see a channel occurs, or conversely, a flag pattern or any other pattern like ascending, descending, wedging, whatever,
Mhm.
there is a sense when you see the actual order flow taking place, where you see the market is trying to push higher with a great fail, or where you see the market push down with a great fail. Now
Mhm.
you try to take all those data points into consideration to actually move the initiation of the upcoming trend. Now,
Mhm.
without the order flow, you know what? I really doubt the power of technical analysis. I don't really know how to read it without the tool the call order flow. Now,
Mhm.
you really count on technical analysis. Now, I want you to break my conception to pieces, because I really
With order
feel that
flow.
this conversation will be able to lead towards. And this is not just a carry on issue that I have.
Mhm.
Many people that listen to this podcast
Mhm.
actually care about this issue. They really want to evolve themselves into something great, and they really want to catch the idea behind technical analysis and how you can really take advantage. Because
Yeah.
understanding the areas where the market agrees to buy or agrees to sell. All
Mhm.
right, there is no discussion in those areas, but where you do not know where the market leads, where you have sideways move and you do not have any other tool, we see a conception. We see a big problem here. Big problem by understanding where the market leads. Now you can
Yeah.
break this. Now you can break this issue.
Let me try. I mean, basically, what you're talking about is how can I see with the order flow, which is coming in and out, all the orders coming in and out. How can I see if a price is just forming a bottom or a top regarding break, or maybe also if a price breaks out certain range, something like this, right? So, which means when is the best time and the best moment to enter the market? Did I get this right?
Hmm.
All right. Um, for me, and just that's just for my trading. I don't use order flow at all for a simple reason. You cannot answer this question till till the end. Orders come and go. You can put an order into the system and you can just cancel it immediately, or you cancel it before it gets touched, or something like this. So you have all the shadow orders, everything in the market. That's number one. For me, I like to look at the candlesticks. But what happens with candlesticks and also the same as order flow? So the problem is that people always like to outsmart the market. And therefore, they go into the market. They try to open a trade. They try to enter a trade earlier than it's appropriate. To compare this with the candlesticks, let's say you have a 5 minutes chart and you're looking at a 5 minute candle while it's building. A lot of people feel like, okay, I'm going to jump in at minute 4 because I already know that this candlestick has a certain form. And let's say you have a reversal candlestick coming up. If you're like, okay, at minute number 4, it's ready. And then they jump in. And at minute 5, when this candle is ready, it looks totally differently. And this is sometimes the reason why people fail when they enter a trade, because they enter for a signal which is not happening at all. It's just in the building. So that's maybe how you can also explain this problem with the order flow, because you see something which isn't there then. And if you were talking about the formations like triangles and flags and everything like this, there's a reason why they are building, because you have some kind of pressure coming from both sides, right? Maybe you have a huge order, which is also then seeable and visible in the order flow. And maybe you have a huge order, a sell order coming from the top at a certain price level. Let's say, make it easy, $100. And still you have some buying. So when, buying going on. So whenever price goes up to $100, selling continues, pushing the price down to, let's say, $90. But a lot of people feel like $90 is a good price, so they continue in buying. So you see also in the order flow that, that you have all the prices, all the orders coming in from both
Yeah,
sides.
but they leave evidence. Now you're really exposed to the data. Now you really
Yeah,
see what's actually happening.
that's
I
true.
think that you really need to have like two big balls down there to not look at order flows.
Mhm. I use
Like
candlesticks for
I
this,
don't I
for a
don't
simple
have the
reason.
same. I think it's a matter of expertise, you know. I don't think that I'm, in a higher level to not do it with an order flow. I need a level of confirmation.
Everything is a matter of expertise, of course. I mean, you cannot just go with, oh, I just read an article and now I'm good to go, right? So, there's definitely more to learn, but it's also a matter of your preferences. I know a lot of people like to go with order flow and footsteps and whatever you want to call it. Basically, it's almost the same, but not totally, but almost. Um, but the problem is always you don't have to do just because or use something because it sounds fancy and everybody's talking about it. You have to use it because you like it, you understand it, and it fits also to your personal needs. And for me, but again, I just can say it for myself. I'm not working with order flow at all. I'm just using candlesticks. But I know a lot of people doing this, a lot of people doing that. So therefore, um, having all because having all the situations with fast breaks, and so you have let's say a consolidation zone where you have a resistance or a support or both, let's say a trading box. You see a lot of reversal candles on the top, you see a lot of reversal candles on the bottom. That's all I need. I don't need any numbers because I see the candles. The candles, they show me what actually has happened in the market, no matter what, right? Who is stronger, buyers or sellers? That's what I need to know. And anything else is more or less guessing from my point of
Mm.
view.
Yeah, I can completely understand. But now I really agree with you on this one. Now, speaking about fundamentals and how you can align them with your technical analysis, what's your perspective within that within that issue?
Mhm. Come again, what is my perspective with?
When you look at a stock and you really have and you finish to analyze the stock technically, now you have an understanding of the fundamentals.
Mhm.
Not like looking at 200 videos, but having an understanding of what really happened over the course of the last 3 months, how you can
Mhm.
insert them, insert a fundamental information onto your technical analysis.
Yeah. Well, if you look at a stock, first of all, you like to know what is a little bit more the long-term perspective, let's say weekly chart or maybe monthly chart, depending on, on the time you want to invest in, or how long you want to hold it. So it definitely makes sense to see the broader picture, to see if it's in general strong, let's say having a very long-term uptrend, or if it's like sideways moving over years. So then let's say your profits are limited, especially if you're going into the stock at the more upper points, where it just almost reached its resistance area. So that's number one. Number two, if you really want to invest, then you need to go a little bit deeper in the time frame, which means you're going from, let's say, long term to midterm, which is daily most of the time. And then you like to look for maybe breakouts or reversals coming from the correction going over into the overall uptrend. So that's it. It's not too complicated. You just want to follow the moves of the market. You don't want to buy into resistance areas. You want to buy at support areas, and you don't want to be caught in the sideways range, especially not if you want to buy. If you buy, let's say, more into at the resistance of the sideways market, maybe you want to buy at the bottom of the sideways markets, like the support zones.
Mhm. Now, speaking about like your priority in technical analysis, what would be the five keys to understand technical analysis in understanding the big picture, like having the knowledge where you align the support resistance lines,
Mhm.
or trying to figure it out the big picture, and then going to the understanding of what really happening within
Mhm.
the inside. What's
Yeah,
really catches uh, your uh, uh, your focus when you're facing a new financial instrument?
yeah. So let's say my five key elements I'm looking for. So first of all, trend. So what kind of trend am I looking at in the long run, right? So is it in general, is it a strong uptrend, or is it just a medium uptrend? Am I going over into a sideways market? So this distinguishes if I want to hold for, let's say, longer time, or if I just want to jump in for a short-term trade. There's no it's totally okay to trade in a sideways market, but this means you have to open and close your position once in a while. It's totally fine to invest in a long-term uptrend if you want to hold for long term, right? So that's first of all what you need to distinguish. And of course, you don't want to buy in a downtrend. So you want to make sure that you always go with the potential of going up, not going down, right? So it's number one, understanding the concept of a trend. Number two, understanding the concept of support and resistances. So this means where where are the areas in the chart and regarding the price where the market participants might react. And react means where they might sell or where they might continue buying. Both can happen at support, both can happen at resistances. I mean, at support, they might continue selling. because this gives you a clear indication if support is broken, if resistance is broken or not. So you want to watch out for these zones. And then you want to have two scenarios. What happens if it gets broken? Do I enter? Do I exit? And what happens if it holds? Basically, usually price reverses then, right? So you need to have two different strategies at the same point. That's number two. Number three, you definitely want to know when the market is overbought and oversold. You can apply this very easily already with a simple moving average. Let's say 50, 100, 200, 20, depending how fast you want to have it. But if you see that the price is very far away from its own average, the probability that it reverses gets higher and higher. So you don't want to buy then, you don't want to invest then, maybe you want to take your profits once in a while, right? So, and when it returns to its average, then you have the higher probability that the price might return to the upside again. In terms of breathing in, breathing out, impulse move, correctional move, impulse move. So that's number three already, right?
Mm-hmm.
Number four, you want to look at candlesticks. You want to see what is the reversal candle. You want to know about hammer and shooting star, which are my favorite ones. So you want to see really what is going on at a point. Let's say you see a reversal sign at a support or resistance area. This gives you a clear indication what is happening in the market. That gives you already a clear indication what to do. So if you see that the price breaks through a resistance area and reverses, forming a shooting star, which is nothing else than a sell signal, you know what to do. You sell, or at least you will not buy. Let's say this. So this gives you some kind of advice what to do and maybe what not to do. And number four and number five, it's number five already, learn about risk management. So if you learn about candles, if you learn about
Which I think this is the most important aspect.
absolutely, I wrote a book about it. I mean, for sure, this is most essential. But to apply risk management, you first of all, you need to understand why you need it. Number one, because of the trend. If it reverses and you sit on the wrong side of the trade, you make huge losses potentially, right? So that's something. So if you understand the concept of a trend, if you know about support and resistances, if you know about candlesticks, you already know where to place your stop loss and where it makes sense to put it, right? And if you know your entry point, let's say with a break of resistance or with coming from the pullback, then you also can calculate your position size. So this means you know where to enter, you know where to exit because of your stop loss, because it doesn't make sense to have this trade in this very moment anymore. And then you can calculate the position size, and then you're good to go. Basically, 5 elements of good trading.
I don't know if it's out of you being very humble person, or we just we just you know, didn't really dive deep into it. But you wrote about technical analysis and about
Yeah,
risk management.
yeah.
Let's talk about the book. What led you to write a book about risk management,
Well,
and how you actually dived deep into it? I don't, if I see myself, I don't
yeah.
think I will ever write a book, but never say never. Um,
Well,
what caused you to do such a move?
well, it's a calling. Let's put it this way. That it's the same reason why I teach. It's the same reason why I do coaching. It's the same reason why I'm a trainer. There are people who just sit at their desk, at their laptop, and they're happy about it. Don't talk to anybody. And there are people, they like to contribute, they like to teach, they like to, bring people a bit further into life, help them, support them, whatever. And for me, it's more the second. So I really like to spread the word. That's the reason is I made my experiences, because how can you talk about trading? How can you talk about risk management? How can you talk about management or anything if you don't have the experiences? So this means, how did I come up with a book about risk and money management? Because I need it. So own experiences, own thoughts, own questioning myself. How could this happen? Why did I lose money? How can I make it better? And then you feel like, well, if I think about this, there might be a lot of people thinking the same way about this as well, having the same question, but maybe not being able to find the right answer. And this is when you write a book, or when you have a webinar, or when you have a training, something like this, or a podcast,
Yeah.
right?
Hmm.
So that basically was the reason. But yeah, you're right. Sometimes I'm a little bit too humble. This book is right now being published in October in China as well.
Wow. In
Yeah,
Chinese.
in Chinese with a
Oh,
publisher and everything. So it's
please
it's
send
a
me a copy. I promise you to translate at least one page.
one
Chinese
page
is
is
really
fair enough.
complicated.
Yeah,
Yeah, I can guess that you have a version in English. It might be much easier for me to read.
I have it
Um,
in quite some languages. Yeah, but English, it's available on Amazon and almost every online store. As you know, software spread, it's everywhere. Luckily, a lot of
awesome.
software does a lot of jobs. Luckily.
Wayland, in terms of trading and in your career, where
Mhm.
do you see yourself in the next 2 years?
Well, as my term is a 6-year term in general for the IFTA, hopefully I still will be president then and just end my 6-year term in 2020, let's say 2026. Yeah, it's 25, 26. I'm continuing teaching people trading for sure, and I'm gonna go deeper there as well. And also, I'm going to do this worldwide. I'm already doing this worldwide. I'm on a lot of conferences, but I just want to go deeper here and yeah, foster it.
You're actually living the dream, you know?
I
People
do.
dream of traveling and trading and making money at the same time,
Yeah,
which it takes a long time to get there. Now, break that
it does.
conspiracy, please, for the rest of the people who are still living the dream and tell them what your lifestyle really looks like.
Yeah. So living the dream, yeah, I do this, but it might not be the dream of everybody. So that's number one. So how can I do this? You need to understand what trading really is about. Trading is not about getting rich like crazy, having a pile of money in front of you. Trading means, at least for me, trading means that you are able to make money every time you want. This changes everything. So you don't have to wait until you're rich. You just got to go as long as you are able to make money in the markets. If you're able to do $1,000 a month in the market, like on a constant basis, obviously you need some experience as well. But if you're able to do this, you're good to go. I don't want to I don't want to draw you into this life, but people wait until they have a lot of money, but then they lost already some years. And maybe you want to think about this. So that's number one. Also, think about networking. As president of IFTA, I am very lucky. I'm a lucky man. I'm a lucky person because I have friends because of this everywhere in the world. In 24 countries, we have member societies. I have friends everywhere. I go to Kuala Lumpur. I meet my friends over there. I go to United States. I meet my friends over there. I go, let's say, give me South Africa, everywhere. Australia, New Zealand, a lot of countries in Asia, China. They always are traders. Happy to speak, happy to meet. So that's it. So that's everything I put into trading. It's not just about, doing the market stuff. It's about doing everything stuff about trading. That's me.
When you're coming to Israel, I would love to meet.
Yeah. I mean, I've been there 2 years
Yeah,
ago.
you have an invitation for a coffee.
Yeah. I've been there 2 years ago and I really loved it. I really enjoyed it. And it's honestly speaking, I'm so, I'll say, concerned about what is going on. Maybe concerned is the right way, or right word. What is going on in that region in the Middle East, but for always. I mean, it's not just for now. It's like ongoing for centuries, and I still can't figure out why. But
Yeah,
nobody can.
the situation is booming, and but don't be very concerned about the situation.
Mhm.
The people will handle it properly, to my opinion.
Yeah.
All right, Waylon, it was a pleasure having you here on our podcast, the Trade Pod. Thank you for your participation. It was a great time talking to you.
Likewise, Afik, thanks for invitation. Thanks for having me. Great talk. Let's continue with that one at a given time. Happy to do this again,
Great,
and yeah, let's
great.
meet personally as well.
It'll be a pleasure. It'll be a pleasure. Thank you.
Thank you. Bye bye.